Okay, so today I'm going to talk a bit about fake chart patterns and some technical analysis concepts that most traders use and swear by to govern their trading, particularly on entries. So I've got my chart pulled up here, and right off the bat you can see some patterns. So here we've got a nice strong double bottom forming at an area of solid support, we would call it, and then going up and hitting some resistance, and you can see that corresponds with resistance earlier, right? And then to top it all off, we've got a really nice shooting star pattern here with our candles, and that precedes this really long, strong downtrend. And then we've got a double bottom, and again a really strong shooting star pattern before going into a strong uptrend. All right, so these concepts of support and resistance are pretty big in trading, and you can see clearly that pattern showing up here. And then if we zoom in, we can look at some of the individual candle patterns. So there's a big one there, is our shooting star at the peak of our uptrend here. So this is a really strong one. You can see we've got a nice strong bullish candle followed by our shooting star, and then another shooting star or doji, but this one is bearish, and then the stock basically nosedives from there, goes all the way down until we hit another double bottom, and you can see that it's tested really low levels and then it's come back up to a level of resistance which previously was its support, and then back down only to come into what we would see as stronger support. And we've got a really nice shooting star pattern, and then here's a bullish hammer going up into a nice reversal. Right, and it slows down a bit here. As you can see, we've approached a previous level of resistance. It slows down, but it eventually breaks through and goes on a nice run. So those are a few of the big, more popular concepts that traders use, and this is where I let you in on the secret that this chart is entirely fake. It's a randomly generated using a spreadsheet, and your open high, low, close values, and just made a nice little chart of it. And you can see that those common patterns that traders use show up even in an entirely artificial scenario. We can regenerate our data and make a new chart, and we still see a lot of the same patterns. So what this is meant to show is that we really shouldn't be spending much time, if any, on charting and technical analysis. Rather, we should be focusing as good traders on statistics and position sizing and risk and money management and all of that. Charting really has no place in our system design, and we can run this 1,000 times and we can just keep seeing the same patterns because our brain likes to assign a pattern where there likely isn't one, because we like to see order and we don't like to see randomness and all of that jazz. So I don't know if this has convinced you, but it is enlightening when you see it for yourself, that some of the endless hours you can spend with technical analysis may turn out to be completely worthless.